All right, let's talk about the fourth quarter. We are breaking down a high stakes guide to winning the final, most crucial quarter in crypto, based on some incredible insights from the Ionics Wealth Club. Q4 is where your entire year gets defined, so let's get right into it. This quote just sets the stage perfectly. If you're feeling a little tired, maybe losing some of that motivation, now is the time to lock in. Seriously, this is the final sprint, and it's the only part that really matters in the end. You see, Q4 is when most people, most traders, they start to relax. They lose their edge. But this is exactly where the separation happens. This is the quarter where the majority of wealth is either made or, and this is important, it's given right back to the market. And here's the crazy part. The 80-20 rule of a bull run. A staggering 80% of the wealth, 80%, is made in the final 20% of the cycle. This is that parabolic phase you hear about. It's when prices go almost vertical as everyday investors or retail just flood in with that insane fear of missing out. If you're positioned correctly before this happens, this single moment can be life-changing. Okay, this is a crucial idea you have to get. It's a massive contrary indicator. See, most people get scared off way too early. When you see everyone on social media screaming bear market, the top is in, that's often the signal that the market is about to squeeze even higher and just liquidate all the short sellers. The market rarely, if ever, hands out easy wins. So how do you even prepare for this? Well, it all starts with a critical mindset shift. We have to understand the difference between being locked in on a solid strategy versus just recklessly going all in. And this just illustrates the difference perfectly. Being locked in is all about discipline. It means you've done your homework, you've got a clear thesis, and you've sized your position correctly so you can sleep at night. All in, on the other hand, that's just desperation. It's a Hail Mary, it's pure gambling with no plan, and it's how accounts get absolutely blown to pieces. So your ultimate goal is something the source calls purposeful positioning, and it's the complete opposite of FOMO. It really is an art. It's about being early, being patient, and setting your position before all the chaos begins. So when that euphoria finally hits, you're already there, just watching calmly, instead of making panicked emotional decisions. Okay, now let's flip to the other side of the coin. Because to win, you first have to know how not to lose. And in Q4, there are 3 deadly sins that will absolutely destroy your account if you're not careful. So, sin number 1 is probably the most common one, being late to the party. The people who wait around for confirmation from social media or the news, they're the same people who end up providing the exit liquidity for the smart money. Every time. Man, this quote says it all. It's not an opinion, it's a law of the market. If you hesitate and wait until everything feels safe and confirmed, you are basically guaranteeing you will buy the top. Being early means freedom, being late means regret. All right, the second sin. It's blunt, but it's so necessary. Avoid doing dumb shit. This means not getting lured into things like these crazy high-yield staking platforms that lock up your capital. In this final phase of the market, liquidity is your greatest weapon. If your money is locked, you're just a spectator. You're not a player. And this also means not being lazy. You have to do the work. Are there big insider unlocks coming up? What are the token emissions? The rate new tokens are created. What do they look like? Ignoring these details is how you become the person that insiders are dumping on. Don't be their exit liquidity. And the final sin, the absolute devil of Q4, is FOMO. The fear of missing out. When you see a token pump 50% in a single day and your brain just screams buy, that is the precise moment you are most likely to get completely slaughtered. Do not chase those big green candles. Okay, so if we avoid those sins, what do we do instead? Well, that's where the profit playbook comes in. It's a clear, actionable framework for taking your gains without letting emotion get in the way. The most crucial point here is having a system that you set up beforehand. At a 2x gain, a double, you pull your initial investment out, maybe a little extra. Now you're playing with house money. It's a free ride. From there, you just systematically take profits at 3x, at 4x, letting a small portion run as your moon bag. This is how you stay disciplined when the market gets absolutely euphoric. Beyond that system, here are 3 dead simple rules of thumb. Think of them as tripwires. The speed rule. If a coin goes parabolic, that's a warning sign. Take a little off the table. The crowd rule. When your taxi driver or your barber starts giving you coin tips, it is probably time to sell. And the structure rule. Use stop limits. These are automatic sell orders to protect yourself from a sudden crash. And I want you to burn this into your brain. You do not need to be 100% invested all the time. Holding cash, what we call dry powder, is a strategic position. It's a weapon. It lets you survive the violent moves and strike when a real opportunity appears. Patience is a form of compounding. So ultimately, this all comes down to one central theme. Q4 will mint fortunes, and it will destroy them. Your edge isn't going to be luck, and it's definitely not going to be emotion. It's going to be your process. In this slide right here, this is a fantastic checklist for that process. This is how you run your account like a business, not like a casino. We're talking daily charting, having a single clear reason for every single trade, controlling your position size so you can actually breathe, and muting the noise when social media gets hysterical. Remember, your account is a dictatorship, and it's run by your rules. So here it is. Here is your mandate for the final quarter, boiled down to its very essence. Be ruthless when taking profits. Be calm and patient with your entries. Stay liquid enough to be able to move, and above all else, be disciplined enough to stop when your plan tells you to. And it all comes down to this one chilling line. This is the final warning and the core lesson of everything we've talked about. In every single trade, there is a hunter and there is the hunted. Your entire process should be designed to make sure you are on the right side of that equation. And that leaves us with one final question I want you to ask yourself as we head into this critical period. Look at your positions, look at your plan, and be honest. Are you genuinely early, or are you setting yourself up to be someone else's exit? The answer to that question will define your year.